Welcome out, friends, and this is another episode of the Trading Justice Podcast. This is Coach T, Tackle Trading, Trading Justice, out here in podcast land. We're episode number 209. As always, the episode is brought to you by Tackle Trading, and if you want to become a pro member of Tackle Trading, definitely go and get in the game. You can always sign up for that pro membership with a 15-day code and use Justice15, and you can start your first 15 days for free on us, so you can try the service and get the market scoreboards and the pro reports and all the different things that the pro traders do over there at Tackle Trading. Fantastic clubhouse, by the way. One of my favorite things about Tackle Trading is the community that you get to be a part of with traders from around the world. And that's just a fantastic way to network and ask questions and get help. Today's podcast is on daily trading routines. And trading routines in general are very, very important. One thing that as a mentor I've learned over the years is providing structure and developing discipline are very important marks for any trader, and if you're out there and you're new, getting yourself a checklist, 7 different things you got to go through every day, or keeping a calendar, just little things that can help you quite a bit. And Matt and I are going to go through and we're going to give you some of our favorite tips and tricks to applying your daily trading routine and making it a part of what you do on a regular basis. Because as you change mindset, from saving, just in general into investing and then into trading and then becoming actively engaged in the market, you're going to need structure, and efficiency is important in any business. Episode number 209, Trading Justice Podcast.
You're in the middle of a battle, the heat of the game. You can't always see exactly what's going on in the playing field. Welcome to the press box, or as we like to call it, the market skyline. Get a bird's eye view of the market's indices, forex, and commodities here in the market skyline.
Now, Matt, let's first talk about the market. One of the first features we always go through is the market skyline, where we take a look at the overall view of the marketplace from a big picture standpoint. What the S&P is doing, what the market is doing, so on and so forth. Right now, the S&P, I don't know what you have, Matt. I still have kind of an uptrend for stocks. I don't think that's very hard to see the uptrend. But the pattern is now becoming more muddy, as you go through the different markets. What are you seeing in the stock prices in general right now?
Last week when we were talking, both of us were buyers, and I don't think anything has changed, right? We were sitting at a support level. You're right there on the 20-day moving average, which has acted as support, ever really since the end of November, really kind of the beginning of December. And I'm counting 1, 2, 3, 4, hover, 1, 2, 3, 4. We've seen about 16 times so far, Tim, that the market's been kind of sitting at that 20-day moving average. And it's kind of doing a little bit of the same thing here. But, the longer it takes to actually start moving up, the more difficult it's going to be, and the more reasons the seller's going to come in. So I am still a buyer right here at these levels. And, markets coming down is not a bad thing. Markets testing support. The pattern does not change unless support breaks, Tim.
Mm.
And last week we categorized on the S&P 500 somewhere around 2350 to 2360 would be that support level. It's currently at 2374. So me personally, I would not consider anything on the downside in any capacity unless 2350 is broken, and we're most likely being a buyer out up here as well. And no, I'm still not a buyer of Snapchat.
Well, those IPOs, we've talked about it. That's not exactly the way to go when you're new or even a veteran. They're just not that predictable when they come out. And we're now a few weeks into it, though, Matt.
Yeah,
Snap came out, it rallied, then it crashed, and now, well, what I would consider a pretty good sell-off. That's not that
30
atypical. I
million
mean,
shorts. 30
that
million
is,
shorts already.
well, haven't
Already.
we seen this plenty of times in the last little bit? It's like one of
Saw it
those,
with Ferrari. You saw it with Facebook. You've saw it. Yeah, I've seen a lot with IPOs recently, and that's why I've always said, stay away, stay away, stay away until you really kind of see what Wall Street is doing. And I'm looking at the initial 2 day moving up, and then just gets absolutely slaughtered, and it's still showing tremendous signs of weakness out there as well, from a price action perspective.
sure.
Options are reasonably priced at 1993. I'm looking at the liquidity in the options right now, and Tim, just 32 days out. Tell me when you've seen this. Call options at the money call options, $20 stock, $20 price, 2,231 already traded in that front month. With that, the 40 delta, you already had 3,849 contracts being traded.
That's incredible.
And that was just today, Tim. Open interest, you're looking at 11,000, 4,000. They just added 50-cent strike prices just literally today. On the put side of the equation, I mean, you got 32,000 contracts already being traded at the $18 put option. There's just a lot of battles going right now
Wow.
between the buyers and sellers, and until we see who's going to really kind of win that war, it's just a stay away. You guys, like I've said many times, you don't make a long-term successful investing career by buying overpriced stocks, and you don't make a long-term successful career buying companies that literally have questionable revenues models, and really kind of their price is basically their price is actually higher than their average user is. That's not how
Mm.
you that's not how you do long-term stocks. So I'm gonna wait and see here. But coming back to the S&P 500, I'm looking at it and I'm still giving it a positive one, bullish bias. But again, the longer it takes to go back up and hit into those resistance levels, the more reason sellers going to have.
By the way, if you're out there listening, you just heard Matt say a positive one. What he's talking about there is market posture. And what traders do, and what we were trained on, Matt, by our mentors, is to rank the market between -3, -2, -1, 0, +1, +2, and +3, and give it a numerical ranking.
Yeah.
And one of the reasons that is so that you can express your opinion in something you can quantify. I know if you're out there and you're some kind of numbers guy, you're like, well, that's doesn't make sense. No, it makes perfect sense because it's based on distribution models on the bell-shaped curve. So learn about market posture. I think that's an important thing. Speaking of the overall market, let's move into the VIX, Matt. Options right now are as cheap as you're going to find them historically.
Yeah.
I mean, it has been slightly lower at certain points, but we're at 11 on the VIX. The VIX is a fear index that measures option cost and option pricing in the market. Very important part of my daily routine and my weekly routine. What does it mean when the VIX is this low, Matt?
Means there's not a lot of fear in the market. I mean, as a consumer, we get so caught up in headlines, and we get caught up in what Fox News or CNN says, and we get caught up in the fear of this and the fear of that. But when the market's looking at things right now, the market's saying, hey, listen, I don't need to insure my portfolio. I don't need to consider buying put options to protect the downside risk. And that's what they're seeing. And even with the Fed interest rate increasing last week, the VIX actually came down. So, I'm looking at this right now and I'm saying, okay, you're currently at 1134. You're 2 points off the ultimate low of 939 coming back at the later part of '07. And so you got a little commonality in that, little calm before the storm. But right now, there's just what the market's saying is there's no reason to really protect that portfolio. But if the market does break support, like we talked about, the VIX will rise. And so the key point when I'm looking at the VIX, I'm saying, okay, the measure of the value of an option here, but in buying insurance is going to be relatively cheap. But why do you need to insure your portfolio by buying put options on the S&P 500 when the market's still above support levels? The risk to the market is not very high. But once that support level gets broken, that way the VIX will start rising. And the longer it takes you to buy insurance on your portfolio, the more expensive it's going to be.
And if you want to do some study on this, by the way, on the YouTube channel, there's a few videos, and in our video blog, Matt, on portfolio protection, and we talk about this a lot in different areas. You can go and look those up, the
Yeah.
Options 201 playlist, and that
Well,
kind of thing.
and that gives me real quick, Tim. Hey, Cam, when we put out the recap of the podcast, make sure you include two links, one for delta weighting, which we'll talk about tips and tricks, and also on portfolio insurance.
I love it. And Matt, you and I were having a conference call today with Coach Noah over at Tackle Trading,
Yeah.
and we've talked with Tyler Craig recently about developing a bear market survival guide. And I
Oh, we're
guarantee
we're excited about that one.
part of that will be teaching the volatility index, because that's how traders kind of get their cue on that. More on that later, but I do want to talk about crude oil next, because it's been very, very volatile lately, Matt. And oil is always in the news. It is always going to be in the news. Number one commodity in the world. It's down, and it's now got a very complicated pattern. Have you changed your market posture yet on this one?
No, I have not. I'm still bearish on crude oil. A little bit of a retracement profit-taking session that we had last week after the tremendous drop the week prior. I don't think you could buy or sell at these levels, T. I think you need to see a little bit of more of a rise in uptick between $50 and $51 before you possibly look to be a seller into that capacity. Maybe even wait till it gets into that 20-day moving average, which is currently at 51.3, and that should come down as the average price is underneath $51. So I just don't see any conviction one way or the other over the last week. A little fade down, fade up action, but I think everybody's just kind of wait and see until that next headline.
And gold next, Matt. We always go through the same kind of basic products when we're looking through our markets. And by the way, guys, we're going to be talking about 10 tips and tricks that Matt and I are going to give you on conducting your daily routine and your trading routine. And the reality is, our market Skyline, Matt, is a big part of our routine. It's not the whole thing, but we do market analysis.
Oh yeah.
Gold is a product we look at regularly. It has had a rebound the last week since we spoke last. It had a few days where it bounced nicely. I'm personally in a short-term mode. I'm in a neutral mode with gold. What would have to happen here for you to get bullish or bearish on gold aggressively as a trader?
On bearish or bullish or which
Either
which
one.
side? Okay, well, I'm seeing. I was looking at gold today, and I was looking at it from multiple different time frames. On the daily chart, I'm seeing a reason to be bearish, and when I'm looking at that, I'm saying, okay, as a long-term investor in gold, this is a perfect opportunity to write a covered call. But then when I'm looking at multiple time frames and I'm pulling out to say a weekly chart and I see it pop into resistance on the weekly chart, I see a reason to be a seller there as well. But then when I pull it out to a longer time frame on a monthly chart, Tim, I'm looking at something a little bit different here, and I'm seeing a reason for optimism is what I'm really kind of looking at here. And I see the old resistance level break above previous levels resistance. I see a little bit of a bullish retracement with an upward movement in price. So I'm seeing a real strong indicator on the buy side on a longer term monthly chart. I'm seeing weakness on the weekly chart, and I'm even seeing weakness on the daily chart. So, it's kind of in that, who's going to win that battle again. But typically, what I do on gold is, as a long-term investor, I'm looking for opportunities to cover it, and right now that's what I'm looking to do is write cover calls
Who
against
was
it.
that guy? Yeah, we shouldn't say it like that guy. Who was that gentleman who was on our podcast we interviewed that was from Scottsdale Bullion? You remember his name?
Yeah,
Oh, now I have
we had him on. Oh,
Tim something.
way to put me on the spot. Yeah, Tim,
Oh, I know it's
and
Tim
he's
Knight.
obviously
No.
no. Just keep digging your grave.
Now I'm just going to start naming Tim. So was it Tim the Toolman
Yeah.
Taylor?
Tim Ferriss? Was it Tim Ferriss?
Tim Hardaway?
Was it? It wasn't. It wasn't. It wasn't Penny
I
Hardaway.
apologize out there, by the way. I literally just got an email from him the other day. I subscribed, got some stuff from him, and I talked to him on the phone a couple weeks ago, and he said something so interesting, Matt, about gold that I wanted to share with you right now. He said, literally, in my 15 years of experience in selling gold and being a gold broker and dealer, I've not seen as little interest in the physical metal at all. And for some reason, buyers are not jumping into the gold. And he saw that as a contrarian indicator. And
Hmm.
that, guys, this is kind of everybody's avoiding it, everybody's ignoring it. Wait until they need it when fear does come back in the market. I like what you're saying here from the big picture. And if you're out there, you're a gold trader, that's different than if you're a gold investor. So, really, really good take on
Well,
that. I think
let me
we got to
just
keep an
let me
eye.
put it like this: from the beginning, and again, I'm looking at a monthly chart here. From the beginning of 2015 till August of 2015, you had the biggest bull run that you've really had since 2010,
Tim
coming into
Murphy.
2000. Tim Murphy, thank you for that. Between 2010 and 2011, and then you had a retracement towards the second part of the year, and it's starting to recover. I could see a reason for optimism on those long-term charts. I just, as a trader, sometimes you get so caught up in your analysis of multiple time frames that it's like, oh, now what? Now what? Now what? And right now I'm looking at short term. I expect it to come down a little bit, but I'm not worried about gold that much as a long-term investor right now.
And last but not least, the US dollar, and then we'll talk a little bit about the news here. But Matt, I'm a Thinkorswim user, and I got, into my daily routine last week, and I clicked on the normal symbol /DX, and it didn't come up. So I got a hold of Toss. I'm like, what's going on? And they hadn't even messaged their clients yet. Apparently, the ICE exchange, the Intercontinental Exchange that processes data for Thinkorswim, is now going to charge clients to get futures data on the 2000 futures and the dollar futures. So they literally just turned it off. So it's not
Well,
available.
thanks, Toss.
Yeah, you got to put in $DXY for the index or UUP for the ETF. Either one will work out there. If you had that same issue I did, by the way, you just kind of check that out. Interesting chart to say the least. I see kind of a funky head and shoulders developing here. I'm cautious about fiat currencies to begin with. I mean, Matt, you always have a big opinion on the dollar. What's yours on this one?
I've been slightly bearish on the dollar ever since it came back down into support. Well, really ever since the beginning kind of 2016. Coming into it, I saw some weakness, saw a slowing momentum coming at the end of 2016, coming into 2017. And then you start breaking minor levels of support, the 20-day moving average, Fibonacci numbers, the 50-day moving average, and then you came into to $100 on the dollar index, and it found some support right there. I called that a head and shoulders way back at the beginning in January. Came back into resistance at that 102 mark that we talked about, slightly bearish on that, and now it's kind of showing its ugly teeth right now. So a little bit of indication on those calls, but here at $100, Tim, it is such an important psychological level right now, and you're having a lot of buyers fight for that level, and if it gets under that level, it could come down fairly aggressively. But until it does it, I'm gonna stay away from any type of short-term trades until that 100 level really kind of pans out. Would not surprise me to see a little bit of uptick to get back into two decreasing moving averages now, right around 101. But outside of that, it's a stay away from me right now.
And last bit of our conversation here in the market, Skyline, one of my favorite things we do on the podcast, because we're just looking at the raw data in the market, is just the general tone of the news I've been seeing lately, Matt. And I want to get your opinion on this. I'll just give you a few of the headlines I've seen recently. In the G20 talks, they're talking about limiting free trade. They're not wanting to expand or open borders or encourage economic activity. Populism, nationalism, it seems like fear is seeping into those conversations. We've talked about presidential elections globally more than probably I ever thought we would, and that's because it impacts so much going on. But most importantly, even in Europe, I was watching some stuff on the French debates on their presidential campaign even recently, talking more about populism and restricting trade and what they're going to do and this and that. I noticed that what was it, Blackstone Group
Mm-hmm.
They moved their offices from London. I think it was Hamburg, Frankfurt, I can't remember, Luxembourg. I think it was Luxembourg. Leaving London, don't want to be a part of the Brexit there in London. Second, probably largest financial center in the world outside of New York City, maybe even larger. I don't know. I would even have to look at some data on that.
More
Uh,
currency trades, less equity.
North Korea launching more missiles. I would expect more volatility, more fear. I
Yeah.
don't see a lot of positive news headlines about economic growth or global activity, and yet it's just not coming to fruition. What's your
Well,
opinion
I
on the whole
mean,
thing?
even the Fed came out, raises interest rates, and in the same time frame the Fed raises interest rates, the Atlanta Fed lowers GDP projection to underneath 1%, which if you understand anything about interest rates and GDP, there's never been a time in the last like 100 years where interest rates hikes have with GDP less than 1% that has never led to some type of correction, 20, 30, 40% down, and yet the market kind of bats an eye at it right now. It's I think everybody's just kind of in this wait and see approach that, we've gotten to such a habit over the course of the last 9, 10 years that it's like this late 90s mentality that just buy everything, right? And I just don't buy that long term. I just don't believe that long term. There's a lot of uncertainty out there in the world right now. And by the way, regarding the nationalist, populist, isolationist movements you're seeing in Europe, I'm not an isolationist and never will be, and, and whatnot. But I do understand that a little more in Europe than I do in the U.S. The U.S. should not be an isolationist, nationalist country. We should lead the global economy. We should lead the global world from a variety of different standpoints. And by the way, we're still secured by thousands and thousands of miles of oceans out there, whereas Europe doesn't have to deal with that. So I can understand that populist movement a little bit, but that's creating a lot of uncertainty in the Eurozone. You have the North Korea situation. You have buildups, and you have buildups in the Middle East as well. And I'm looking at this situation. I'm saying, oh, the market doesn't even care, right? But I think it does. I think it's the calm before the storm. I really do. I do not think it's going to be this year. I just don't. But I think we're waiting on that spark. I really do. I think we're waiting on that black swan event. And when that black swan event hits and those high frequency trading systems get in line, I think it's watch out below. And I don't think anybody should get into the prediction business of when that's the case. And I don't think anybody should get into overanalyzing the geopolitical situation around the world. I think we should focus on trend and trend until those support levels are broken.
Yeah, there's no question about it. Very good advice. Guys, that's been the Market Skyline. We've got a great podcast planned for you. After we come back from our next break, what we're going to do is we're going to give you 10. Matt's got 5, I've got 5, and we're going to give you 10 tips and tricks on how to perfect or improve your daily routine, your trading routine. And we are right back after these words.
Ladies and gentlemen, it's time for our featured presentation, Tips and Tricks. And these tips aren't for Snapples, and these tricks aren't for kids. Find out how to make the most of your daily trading routine with the TJ Tips and Tricks.
Welcome back to the Trading Justice Podcast, episode 209. We just got out of the market skyline, analyzing the dollar, analyzing crude, analyzing commodities, analyzing the S&P 500 as well. And I think the one takeaway we had in that was to focus on the trend, focus on the pattern, focus on support and resistance. Do not get too caught up in all the hoopla out there and the geopolitical situations and the headlines. Most headlines are there to create some type of panic and some type of fear, but focus on the trend, focus on the VIX. That will tell you much more about how the market and how Wall Street thinks about what's going on out there than any news headline ever will. And now we're coming into our feature presentation. We're going to focus on tips and tricks today.
Love it.
And the topic is tips and tricks regarding daily routine and just overall trading routine in general. And Tim, we're going to go through 5 each in terms of just some pro tips and tricks. And so I want you to start out with the tip here, Tim. What's your first tip for the listeners out there?
Simple one. schedule it in. Okay, so right, and I want you, Cam will put these in the notes, but and don't write this down if you're driving. That is not safe for the road or for humanity. But if you're at home, you can write these down. Number one, I'm going to give you is schedule it in. One of the biggest challenges I've found, working as a coach and a mentor, working with people, trying to build this into their life for a long time, Matt, is that they have hard time developing anything new in their life because it's not a habit yet. And so whenever I find somebody and whenever I've met somebody who just was missing a day here or there, I went right into their calendar, either on their phone or their iPad or in Google or wherever they keep a calendar. And I said, okay, pick a half an hour. Okay, during that half an hour, there's nothing else. That's what you do. And lock it in, schedule it in, make it consistent so that you can develop a habit of it. That's my number one tip.
My next one, Tim, it kind of goes in line with that in terms of schedule. You said schedule yourself 30 minutes. I'd even go a step further than that. Put yourself a timer. Get your iPhone out. Put a 30-minute timer. Force yourself to go through your routine. And if you don't make it in that time frame, that's perfectly fine, guys. Walk away. You will have a long time at this. Focus on that 30 minutes. Focus on the efficiency of time. And what will happen over time is that you will start to develop a faster routine. See, Tim, I believe that outside of scalping and day trading, you should not be spending more than 30 minutes in the market every day. That just simply means that you are staring at things, you're begging charts, and you're hoping for something this or that. Put yourself on a timer, focus on efficiency, get that done. If you don't get it done within 30 minutes, then get out of the market. Go live your life. The reason people become a trader and investor is to have more time, not less time. Do not replace one job for another one. 30 minutes in, get out, put yourself on a timer.
Okay, so this actually kind of gets to my next one. And one of the ways you'll get down to 30 minutes, Matt, and when you're in your first 3 months, 6 months, believe me, I get it. It's going to take you a little bit longer, but it shouldn't be 6 hours, okay? And I'll tell you where people get stuck is when they have to go back and do the same thing twice when they should have just done it once. And this is where number 3 for me, 3 out of, however we're keeping this list. Third one is to automate your exit orders when you can. And so number 3, automation of management. So Matt, the way that I know that we can get it down into a window is if you have your stop loss set and your target set, if you learn how to do a contingent order. That way, guys, when you go in there and you're looking at your position statement, you don't have to ask yourself, well, where's my stop loss again? And do I have a target set for this trade or whatever it is? If you don't know orders, that's where you probably just need to be in your classes right now. But that's automation orders, Matt. That's number 3. Is that a trick or a tip? We always debate this. By the way.
I don't know. I don't know what a tip is. I don't know what a trick is. It just is what it is. I think they're both kind of the same tips and tricks. Pro tip here versus a pro trick. A pro tip being automate management. Couldn't that also be a pro trick?
Maybe a tip is advice or direction, or we're giving them a directive, where a trick is actually do this mechanically. I don't know.
Okay, so you tell me what my next one is. The 4th one on the list is manage your portfolio based on delta weighting. Don't manage your portfolio based on, I have this many bullish trades and I have this many bearish trades. You want to manage the weight of your portfolio not based on an individual position, but you want to do it weighted against the S&P 500. So weight your portfolio against the spiders and then track that delta number. What your net delta number in your portfolio will do is it will tell you with one number, Tim, how much weight you have in your portfolio from a neutral to bearish to bullish perspective. So if you hear, me and Tim on a Monday night talking about, all right, we're +1 on bullish on the marketplace. Mm-hmm. Well, then obviously we want to carry a bullish portfolio this week in the market. And how we do that is we don't add up we have 7 bullish trades and we have 2 bearish trades. No, we simply look at the delta weighting number, and that will categorize it based on where we want our delta to be. And over there at Tackle Trading, you have a portfolio management trading journal for you pro members, and you can download that and you can plug in your account number, or not your account number, but the amount of capital you have in your portfolio, and that will tell you exactly where you want those delta numbers to be.
Now that was actually beautifully said, but how I would categorize that one, by the way, is I would say that was both. Okay, so
oh my God.
Okay, no, first of all,
wait a second.
I got you. No, listen. Okay, listen. Telling them to beta weight the portfolio is a tip. Using the S&P and then measuring it based down to the number, I think that's the trick. So that's what I'm going to call the double whammy there, Cam. Definitely a tip and trick.
Whammy.
Whammy. I love it. So what are we in right now? Are we 4 in?
We're 4 in. You're up. You're up.
So here's number 5. Use a heat map. Okay? Use a heat map. Okay? A heat map, that old saying, Matt, a picture is worth 1,000 words. We've got heat maps everywhere. They're all over the marketplace, but you can find one in the Trade Center at Tackle Trading's website. So, and that's just, everybody can access that. Go and find tools in Trade Center. Heat maps, the first box up there. And I love heat maps, and they're actually more robust than what most people dig into. But even just a simple heat map of the S&P 500 will give you a good visual of what the market is doing. And I love that. So next one, use a heat map.
Well, I want to talk about the heat map real quick because it's so important. You can know exactly what happened in the market today without even spending 30 seconds in the market. And I just pulled up a heat map, Tim, and I'm looking at the heat map right here. Okay, so the good sectors today, you had consumer goods, that was it. You had some services, that was it. You had a lot of red in financial, and you had a lot of neutrality in basic materials, healthcare, industrial goods, technology. Pretty much a mundane day, but if you're looking for the best sector today, I would say that was consumer goods. If you're looking at the worst sector today, that would be financial, led by your Bank of America's, your Wells Fargo's. Your best sector in terms of consumer goods, you're looking at Apple up 1%, Philip Morris up 0.89%, Nike's up about 1.52%. But if you're looking for the best stock that performed today, you're looking at the Caterpillar up 2.68%. You're looking at CF Holdings up 3.78%, and you're looking at BHI, Baker Hughes, up 2.5%. Yeah, I like that heat map discussion. You can use heat maps for pretty much anything from daily performance, weekly performance, P ratios, and whatnot. My next one revolves around understanding economic reports. When you look at an economic report, and the one we like is at forexfactory.com, economic reports have such an important perspective on the marketplace itself. And when I'm looking at economic reports for the first time, you're going to see just hundreds of them, just absolutely hundreds of them. And most of them are just nobody really cares about. So what I would suggest doing on the economic calendar is filter it to the ones that are the important ones for you. You don't need to look at Swiss franc SMB reports if you're not trading currency. You don't need to look at the Japanese yen reports if you're not trading currency. You want to look at the U.S. reports, and you want to look at the major reports. So there's a filter icon that you can do on Forex Factory where you can hit the filter button. You can filter from color code. Red is the most important. Only put the red reports. Make sure you're only looking at the U.S. dollar reports, which are the ones that impact the U.S. economy.
I love it. It's a great tip. And the thing about it is you should not have more information than what you need. So red filter, high priority impact, really, really good tip there. The next one I'm gonna give is to use a perf chart. And this is more of a trick, Matt, I would say, in a sense that if you do want to break down markets in a different way and get quick information instead of having to look through 12 different sectors, you can actually use what's called a perf chart. And under the Trade Center, market and sector analysis, just click on it and it will show you a perf chart. And then instantly you'll know the measurement and the value of the different sectors against each other. Save you some time on sector analysis. If you're going to dig into it deeper, into some of those layers of the market, that can really speed it up and save you some time. So I think that's 7,
Seven,
Matt. We
seven.
got three more. So what's your next
The
one?
next one revolves is very similar to the delta weighting one I had, but this one now is called a theta target. The theta, if delta determines the directional weight of your portfolio from a bearish, bullish, and neutral perspective, the theta target tells you whether you're paying cash flow or whether you're receiving cash flow. And if that theta is a negative number, it means you are paying the sellers of options the theta, the time decay, the depreciation of theta. We like to carry a positive theta. And if you do not have a positive theta or do not know how to get a positive theta, you have positive theta for option sellers, you have negative theta for option buyers. So if you do not have a negative theta, or excuse me, if you do not have a positive theta, that means you are primarily a buyer of options. And for the most part, we want to be a seller of options. And that's where theta target comes in. You want to target the amount of cash flow that you want to receive on theta, and that's very important. So I would say start reading that theta number from a positive to a negative, and if you don't know how to use it, get to a positive theta, then obviously you need more education.
Number 9 is, and such a fun conversation here, Matt, because it really goes down to the heart of just trading on a daily basis.
It's
And I love
efficiency.
this.
This entire
Absolutely.
conversation, Tim, is about how being time efficient. And when you look at one of the things that people struggle with out there, they're always saying, "I'm busy, I'm busy, I'm busy." Well, it's because you're probably not as efficient with your time as you need to be. And this entire conversation, Tim, it just goes around efficiency. I mean, I'm looking, schedule it in, set a timer, automate your management, manage your portfolio based on delta instead of singular trades. Look at the heat map instead of looking at 500 different stocks. Filter the economic calendar showing, looking at the data you need to look at. Work on your theta target. I mean, these are things that allow you more efficiency of time, which, let's face it, time's our number one commodity.
So this is where I think this last one for me, and then you got one more, is also in the same line, and that is work from a playbook. Okay. And guys, one thing where I've seen over the years working with students, working with traders, working with people out there, is if they've got 100 strategies, but they don't really know exactly how they're going to do all of them, they end up getting very distracted. They end up getting, out of whack with, if you're doing covered calls 50 different ways from sideways, that's fine if you're an expert. But most traders, even good traders, they should have design
Yeah.
rules. When you go into the trade tab to build a naked put, you should know how much time, which delta, how you're going to do it. So work from a playbook. And when you're new, get a mentor and use their plays. And over time, through testing, design, education, you develop your own little niches, but work from a playbook. That's my number 9 here.
Well, you said, Tim, if you're a professional out there, yeah, you might have 50 different ways to trade a cover call. And I'd say, even if you're a professional and you have 50 different ways of trading a cover call, you're probably overanalyzing this to death here. And that comes into my last one. And since you mentioned the cover call, this is my pro tip or trick, however you want to categorize it. When you sell a cover call, when you sell an option, a call option against the stock you own, that is called a cover call. What you have to manage, guys, is you have to manage two things. The first thing you have to manage is the strike price that you sold, and the second thing you have to manage is the net liquidation value of the call option you have sold. And so here's my tip. It goes around to, again, efficiency, this time not time, but also monetary efficiency as well. And so, Tim, what my tip is if you're managing that covered call, and let's say you sold something and you received $100, and you're going to receive that $100 over the next 30 days. But as the stock starts going down, all of a sudden the $100 will decrease in value per $1 movement based on delta. And so as it goes down to $80 and $60 and $40 and $20, you're capturing less and less and less over time. So let's say that you sold it, you have 30 days in the option, and over the next 7 days the stock comes down a little bit, and instead of having $100 in net liquidation value, you now have $20 in net liquidation value. So the question I have for the listeners is, would you rather sit on that trade for the next 23 days to capture $20, or would you rather buy back the option at $20 and reissue another $100 call option? And so what I would suggest is if your call options ever get to the point of net liquidation value that is 20% of the original trade price, buy it back and reissue.
I love it. Guys, this has been our feature presentation, tips and tricks for the daily routine. Matt, what a great list. Schedule in your time. That's efficiency. Set a timer. Make sure that you're working from that. Put a little bit, focus into it. I like that. Automate orders. Delta weight your portfolio. A lot of great tips on how to beta weight and delta weight that. Use heat maps. Economic report analysis. Keep it down to the simple stuff that affects your markets. Use perf charts to measure more than one market at one time. Set a theta target as part of your cash flow goals. Work from a playbook. And, the last one, just knowing how to look at the actual numbers. Manage the strike, manage the net liquidity in your covered call and your strategies. What a great list. Great job there, my friend, my bro. Awesome one. Now, what we're going to do is we're going to take a small break here. These words from Cam, our producer. And Cam, during this break, I know you're going to cut this later. I want you to get super sultry, right? Get into this.
Turn it up a notch.
I want to turn it up, all right? And we will come right back from here, and we're going to get into our clown shoot.
I'll be listening to this podcast on the airplane, Cam, and I want to feel like in this little break you have right here that I want a glass of wine. That's how sultry and sexy I want this drop. We'll be right back with more of the Trading Justice podcast after these words.
Everybody wants that perfect coach. Not too strict, not too lax, and gets the job done often. Call me. Tackle Trading presents 50 Shades of Trade. Come get your portfolio whipped into shape with the smooth, sweet, succulent Coach T and Papi Chulo himself, Matt Justice. 50 Shades of Trade is rated JK and may not be suitable for traders that aren't serious about major gains. Come learn more about 50 Shades of Trade at tackletrading.com. Oh, yeah.
Welcome back to the Trading Justice podcast presented by Tackle Trading. And, Cam got sexy there, didn't he? He got sultry. I mean, he just, wow. I feel like I need a shower and a glass of wine there, Cam. That's how good that one was. Hey, Tim, we're on our last segment here, and that is the clown of the week. And we got, so many different potential clowns. I mean, from the NCAA
honestly.
tournament to political to to business out there. The president from Uber who had to resign, to the guy that stole Tom Brady's jersey got busted down in Mexico. Just so many to choose from. Tim, let's go first with Cam's nominee.
Well, this is another one of those, that world's dumbest criminals type thing. There's a man in France that was arrested because he tried to make a hole through a window of a shop that he was robbing.
I saw that video.
And the man was drunk as well, and he got stuck.
Have you seen this video?
I didn't see the video. No, I see the picture.
Oh my God, you got to watch the video. I was watching Bill Maher on Friday night. I was down in Houston. Me and Bo were watching it. And Tim, the funniest video ever. I mean, here's this guy, okay? There's a glass window, right? That's not one of the ones that just breaks, but it like shatters. You got to pull it apart. Right. And it's like a birthing scene, right? And I'm serious. It's like this birthing scene. And it's just like he's struggling to get through it and get through this window. They just had a small hole through, and he puts his arm through it. He's just like literally, it's a birthing scene, and he gets through it, right? And I don't know if he was breaking into a liquor store or something like that, but okay. But the funniest part about this whole thing is once he did the hole, the original hole, Tim, the lock was like 6 inches from the hole. It was like literally 6 inches from the hole in this door, and he could have just unlocked it, but he just fought that. It was, you
Oh
gotta watch
no.
that video. It is so funny. Obviously, it was just nuts, dude.
We tend to, as a society, we tend to love when criminals do dumb things, because quit breaking the law, quit getting bad karma. But that is
It was
particularly
so
bad.
bad.
They don't release the man's name. I think we'll keep that one, on the table for definitely clown of the week. I
Uh,
like that. So what are we gonna call him? Just man stuck, or the birthing through a window? Like, how would you label
Drunk
that?
and dumb is drunk
Drunk
and
and
dumb.
dumb in France.
Drunk and
Drunk, dumb
yeah,
in France. There
things
you
you
go.
do when things not to do when you're drunk in France, drunk and dumb in France. You got to check that out
I
though. You
got
got to
you.
check that out. I'm next, Tim, and I weighed this, and I had a lot. I had like 15 different candidates, and like there's some really good ones, like some kind of sad ones, like the guy. I can't remember, but they were playing Northwestern, and he called a timeout, or no, he committed an intentional foul against Northwestern when he thought they were down by one, but they were really up by one. And with like 1.5 seconds left, the kid hit 2 free throws to win the game in the NCAA tournament. That one was bad. Shaquille O'Neal, the world is flat and satellite imagery is
I
wrong
saw
and
that.
fake, and just come on, Shaq. These guys, I'm getting to the point where these guys are just scrolling. Um,
Isn't he the big Aristotle?
well,
I mean,
not Aristotle anymore, because Aristotle would have probably thought the world was round with all the evidence we have. To the other one, did you see that interview from last year, or interview of the year, where basically the guy's given an interview with some news channel. His kids come in, and that wasn't funny, but the funny was that his wife's reaction to trying to pull the kids out. That one was so funny. I had a good time with that one. I mean, just honestly, just so many good stories that we could poke fun at. But Tim,
right.
I have to do it. I don't have it in me not to, and I love my Trump supporters. I do, but my God, did he have the worst week of any president for a long time? The healthcare debacle, that is not going to pass the Senate. I mean, that's dead on arrival. To basically, would not look Angela Merkel in the eye, who Angela Merkel is about as accomplished of a politician and a person in the world today.
Right.
Basically has been helping run Germany out of the Cold War to, one of the largest economies in the world, to, the only country that actually applies Keynesian economics in the fashion that Keynesian economics is supposed to be. I thought that was a kind of a disgrace, to be honest with you. But to go to Twitter and to accuse President Obama of wiretapping worse than, basically Watergate is what it was just completely insane, with literally zero evidence in any capacity. And then to suggest that, when called upon it, to basically say, well, go ask Fox News. And Fox News, basically, one of their anchors comes on and denies it. And I'm just looking at this and I'm saying, at what point are we just going to, kind of call a spade here, and say maybe, just maybe, there might be some psychological things going on with this? I mean, this is getting insane, but it's amazing. And then I watched him giving a speech today. It was like he was running for president again, and he's just having these totalitarian cheers of USA, USA, talking about fake news, and it just amazes me. It just literally just amazes me. But
I have much to say on this, and I do want to nominate. I like
oh,
the
I
nomination of
forgot
Trump,
all
and
about calling Snoop Dogg out. How do you call Snoop Dogg
oh,
out? Can you imagine what the outcry would be if Snoop Dogg, failing career and all, had aimed and fired a gun at President Obama? He would go to jail, right? I mean, just. Oh, and by the way,
going after Snoop Dogg, and then he's getting into an East Coast West Coast rap battle now. I mean, you've got a lot going on. McDonald's tweeted at Trump.
Oh yeah,
now.
McDonald's. That
his
was
approval
good.
ratings in
37%, according to a recent Gallup's poll. Wow.
Have you seen Black Mirror?
I have seen one episode of it.
Oh my God! Some of the episodes, it's kind of like got this Twilight Zone feel to it. It's all about technology, the dystopian future of technology. This could have been an episode on Black Mirror. The president goes off on Twitter and starts to engage every celebrity and person that ever I mean, it literally is like a dystopian version of what you would imagine something terrible in the future, and it's what we're living with.
And honestly, Tim, I tried to not nominate him, but it was because I love the support, everybody, and the passion for your political belief system. Continue to be passionate. Continue to support the people you believe are going to better this country in the future. But each day I look at this and say, are you kidding? Are you kidding that this is how we think the U.S. government should be ran? That through a Twitter account accusing past presidents of absolutely illegal felony type material, and we can just brush it under the rug because 5 days later there's 9 other lies we have to consider. It's like if I lie enough, nobody remembers the old lie. It's utterly insane. So I'm going to give it to him.
It is crazy, but I will say this: did you see the last thing on the Trump thing? Did you see that Comey in front of can't remember which Senate it was, but literally while he's up there, they asked him to defend a tweet that Trump did while Comey was being.
I saw this.
The
NSA director and Comey, the FBI director, is given sworn testimony in front of Congress, and there's questions about Twitter. About Twitter. Are you kidding me?
I got a good one though. To transition. So we got the drunk guy hanging out in the window, funny video. Then we got the Trump thing, dystopian. Get some people upset, whatever. Politics, we are not shy of our opinions. Now I got one probably a little bit more, I think, just Matt, and the Monopoly game.
Oh yeah.
Okay, you remember playing Monopoly,
Great
right?
Game.
Hasbro Corporation recently decided to oust 3 of the classic pieces on the Monopoly board, and they replaced them. So essentially what they did is they took the shoe, the top hat, and the dog.
Trump's
right?
dog.
I believe. No. Let me make sure I got this right. And they replaced them with a T-Rex, a rubber ducky, and a penguin. What's your view here, Matt? Did we need to update Monopoly to the 21st century?
I do not remember the outcry.
Oh, no. Hold on. I got the wrong. First of all, I'm just looking at the article. I knew I had it wrong. They took out the thimble, the boot, and the wheelbarrow. So
basically what they're taking out is everything that represents building infrastructure in America. Okay. Right. So wait.
Right. Textiles, hard work, labor.
Are they replacing it with a Facebook icon? I mean, come on, Monopoly. A couple things. Number one, I don't remember the outcry about this on social media. I don't remember anybody coming out hashtag Monopoly. You need to, you need to update to the future. I don't remember that. Number two, there are literally probably 50 different versions of Monopoly, from Star Wars to random this and that and that. So why? I mean, did they feel like they needed to be in the headlines?
What was your Monopoly piece, Matt?
The boat.
If you could pick one.
The horse or the boat.
The
horse or the boat. That was me. So if they would have taken out one of those two, it's on.
Right. I always like the top hat.
You like the top hat? It's Monopoly.
I did.
It's Monopoly.
Because I'm a gentleman, Matt, is why I like the top hat. So we've got 3 nominations. You got Hasbro, you've got Trump just for his week here, and just being Trump this week, And you've got the drunk guy in France. Cam, you tell me in the text who you're going for. I'll go ahead and vote first. Maybe we'll get mentioned by the president on Twitter if we tweet at him, Matt. So I'm going Trump. He's off the rails here. The TJ podcast, we're going to put clown shoes on Trump and see if we can get mentioned.
I don't think you have to. Listen, I don't even think you have to put clown shoes on the man. Right? And you could take that wherever you want to take it, listeners.
I will say this. I did see a positive thing about some Trump criticism recently. A coven of witches cast a spell on Trump, not in a negative way, and this was actually on NBC News, to just keep negativity out of his decision making, and it was a very specific spell. So maybe that'll
help.
The right approach.
Maybe that'll help. Yeah, when I nominated Trump for the podcast, the Clown of the Week, I was thinking of my good student Cody. That one's out. That one's for you. That one's for you, Cody. I'm actually going to vote though for the guy in France, the drunk guy in France. Oh my God,
video.
Tim.
Maybe the video
it would sway your vote. I'm not kidding. While Trump kills humanity, at least we'll laugh along the way. It is that funny, and I mean, I just totally spaced off until Cam nominated him. It is one of the funniest things that I have ever seen. This guy trying to get through. So I'm gonna vote for the guy the drunk guy trying to get into an electronics store, having a birthing scene with the door.
Cam's telling me in the chat he's going for Trump. So
Trump gets it.
Matt
Trump
officially,
gets it.
President Trump, you are now
Clown of the Week. We got a lot of great things coming down the pike over there at Tackle Trading, guys. Get out there, check us out. We got 2 new systems over there. You can go out and check out the 7-step successful trading guide, where you can watch the videos for basically free. We also have Technical Analysis 101, which will teach you the basics of how to analyze the chart. We got Options 101 coming down the pike starting in 2 weeks from now. And so get over there, test out Tackle Trading by using the code Justice15. You can find us on Twitter. You can find Trading Justice on Instagram. You can find us on Facebook. We're all over there. And as always, guys, if you do like the podcast, regardless of political rants or not, if you like what we bring to the table trying to educate the masses, share it with a friend. Tell somebody else about it. And get out there and let's focus this week on getting more efficient with our time from a trading routine perspective. Let's schedule, let's time, let's focus on that feature presentation, and let us know how that helps you out with your time efficiency over the course of the next few days. And we will see you next week with more of the TJ Podcast.
Trading Justice Podcast brought to you by Tackle Trading. Music brought to you by ProudMusic.com. We'll see you next week.